And joining me now with more is Tim Urbanowicz. He's a chief investment strategist at Innovator Capital Management. Tim, it's great to have you in studio and some decent momentum that we've seen in equities of late.
Yeah, it's great to be with you, Kristen. And yes, what a difference a month makes here.
Yeah.
Much different narrative. I think investors are getting back to the excitement when the administration was coming in, focusing more on things, tax cuts, deregulation, and finding some stability on tariffs. And I think right now, one of the things that we're encouraging our advisors to really think about is, on the tariff front, we need to be cautious not to just assume that we're completely walking back the stance that we saw a month ago. Trump is still a fan of tariffs.
Yes.
They're not going to zero. They may be going down, but they're not going to zero.
Yeah, and 90-day truces, right? 90-day pauses are a lot of what we see. So probably midsummer we'll start to see some of these deals renegotiated if that comes down the line. How is your firm preparing for that?
Well, I think right now we're talking to clients about really preparing for a wide range of outcomes.
Yeah.
Yeah, you look at the deal with the UK, that's easy. You didn't have a trade deficit with the UK. Some of these other nations are going to be much more difficult. It's going to be challenging. Do we think we get tariffs down? Yes, but again, they're not going to zero. And what impact that has, I think, is still a big unknown. We really see this tug of war playing out between some of the bullish catalysts, deregulation, tax cuts, and tariffs. And where we go, we think it's really important to prepare for not only just the base case scenario, but also make sure that we have some downside protection in the portfolio in case those tariffs start to drive inflation, they start to really slow growth.
So let's talk about your bullish case here. House Majority Leader Steve Scalise had joined me on the floor of the stock exchange a few weeks ago saying that by Memorial Day, that's just a few weeks away. At this point, he wants to have a bill on the president's desk to push through his agenda, and that would include these tax cuts. How does that benefit the market from your perspective?
Well, I think in a big way. If you look at the economy over the last several years, the high-end consumer has been carrying the bulk of the weight. That's been driving stock earnings. That's been driving everything. You look at a lot of the provisions in this tax bill, a lot of the things that were promised on the campaign trail. No tax on tips, tax breaks for seniors, a lot of tax cuts for those making under $160,000. Those are big deals, and really putting more money in the pockets of consumers. We estimate that to be about $100 billion if the bill goes through as the House proposed. That is significant. That is going to drive markets. Does it all get through? Potentially, we think the bones are in a pretty good spot. So we do see that as bullish. But again, the big thing is how much can we get tariffs down?
Yeah.
And also how much can we keep inflation contained? If we just have growth continue to run and run and run, are we really going to get back down to 2%? Probably handcuffing what the Fed can actually do.
Does your firm forecast where you see inflation heading from here?
We think it's going to be sticky. We think it's going to be right around where it's at now. And one of the things that we have been adamant showing our clients over the last several years is you look at every case of inflation in the U.S. going back to the 1960s. Anytime we've breached that 5% level on core, never before have we got down to 2% without some type of recessionary hit to the labor market. And I think that's really important to focus on. Would it be great if it did happen this time? Absolutely. But we don't want to take that as just a given. It's never happened before. Why would we assume that it's happening right now? And if you think about why that is, at the end of the day, wages drive consumption, consumption drives inflation. So if people are out there working, their wages are increasing at such a steep clip, it's really tough to get that down. So not to say we don't think stocks can do well if inflation stays sticky, but we need to think about preparing our portfolios for an environment where rates are higher.
Yes.
And also a pretty big threat to the path of equities.
So to that end, how do you see the Fed moving forward when it comes to rates? We've heard a variety of estimates here on this show. People think maybe as soon as July we could see a rate cut. Others forecast December.
Well, we don't think you're going to see anything this year. And I think for the first time in a while, we see the Fed in a pretty good spot to just hang out, wait, let the data come in. And I think Powell highlighted it in the last press conference. He said, hey, we have risks on both sides of our mandate, and we're not sure which risk we need to attack yet. Is it growth? Is it inflation? So I think their policy is in a good spot. Wait and see, and to be able to react. Again, I think the risk that investors need to be thinking about is if we do have those tariffs that really play into that growth scare, and we have core inflation still hanging out around this 3% mark, it really is going to limit the Fed's response. So risk management is paramount right now, especially on your equity allocation, and really being strategic of how you do that. is critical.
Let's walk through what you think would be a strategic allocation right now for someone's portfolio. What would that look like?
Yeah, I think right now, I mean, there's been such a tremendous movement that we've seen in this market toward options-based strategies, managed floor ETFs, buffered ETFs. We've seen about 8 to 10 billion coming in just this year into buffered ETFs. And I think one of the ways that we see advisors using those is as a way to really decouple risk management needs in their portfolio from the reliance on interest rates having to come down, which is critical right now, given the Fed's position. So those buffered strategies where you have a known level of downside protection over a set outcome period, you have upside up to a cap. You're really separating, even if rates are continue to go higher, you still have that protection in place, which is really, really important right now.
Tim Urbanowicz, he's a chief investment strategist at Innovator Capital Management, joining us in from Chicago today. Tim, we really appreciate it.
Great to be with you.
Thanks.